Welcome to Spidell's California Minute. I'm your host, Catherine Zidane. This week we're covering the answers to questions we've been getting about which employers need to register for CalSavers before the end of the year to avoid penalties, including household employers and employee owners. Attend the best year-end tax update and get everything you need to be prepared for tax season. Register for Spidell's Federal and California Tax Update at spidell.com. By the end of 2025, all businesses that do not offer a qualified retirement program to their employees are required to register with CalSavers if the business has at least one California employee who is 18 years of age or older. This includes part-time and seasonal employees. Once registered, the business has to facilitate employee contributions to CalSavers retirement program unless the employee opts out within 30 days of being contacted by the program. As we discussed in our June 27, 2025 podcast, the penalties for noncompliance can be severe, up to $250 per employee initially, increasing to $500 per employee annually after 90 days of noncompliance. With the December 31st registration requirement looming for employers with 4 or fewer employees, we've received a lot of questions regarding who is and isn't required to register and how to claim an exemption if an employer was erroneously contacted by CalSavers. The number one question is whether household employers are required to register with CalSavers. Many tax professionals are questioning whether the mandate applies to household employers because an eligible employer for CalSavers is defined in the code as, quote, a person or entity engaged in a business, industry, profession, trade, or other enterprise in the state, whether for profit or not for profit, that has at least one eligible employee, end quote. According to CalSavers, household employers are considered mandated employers and they have to facilitate contributions for any wage-earning employees who do not opt out during the 30-day period to do so. Household employees are counted as employees if they are California W-2 employees, even if the employer files a DE-38HW, Employer of Household Workers Quarterly Report of Wages and Withholdings, rather than a DE-9C. All household employers reported to CalSavers by the EDD are subject to the mandate. CalSavers has stated that if a household employer does not receive a notice informing them that they have to register, then they do not need to take any compliance action. Another question we get is regarding businesses where the owner is the only employee. If the business owner and their spouse are the only employees, then the business is exempt from the mandate. This applies to S corporations whose only employee is the shareholder, owner, and/or their spouse. These businesses should not receive notices from CalSavers directing them to register for the program, but we've heard that some of these businesses have received these notices. According to CalSavers, these entities should go onto the CalSavers website, register with the program, and certify their exemption by checking the following boxes on the registration form. First, the My Company Does Not Offer a Qualified Retirement Plan box, and then the box My Company Currently Has No California-Based Employees or No Employees Other Than the Owners. Then select the most applicable reason from there. The box, My Company Does Not Offer a Qualified Retirement Plan, has to be checked in order for the second box to appear that deals with no employees other than the owners. Businesses created in 2025 generally have until December 31st after the year in which they hire their first California employee, and that employee is reported to CalSavers by the EDD to register for the program. CalSavers has partnered with a third-party vendor, Payroll Integrations, to offer automated payroll integration services for CalSavers employers. Employers can sign up for payroll integration services through their employer portal on the CalSavers website, and for a small fee, effectively automate the majority of their responsibilities to run CalSavers via payroll integration. Get details on CalSavers plus the answers to all of your other California tax questions with Spidell's analysis and explanation of California taxes manual. The 2026 edition will be shipping in January, and you can pre-order at spidell.com under publications. That's all for this week. Join us next time for another episode of Spidell's California Minute.